Good morning and thanks so much for joining in. You're watching Ask BQ on BQ Prime. My name is Alex Matthew and with me is Smriti Chaudhary. We'll take you through the next half an hour of trade. We're here to get all of your stock-related questions answered, and if you have questions for us, you can send them to us on any one of our social media platforms or in fact on the WhatsApp number that should be flashing at the bottom of your screen. Joining us to answer all of your questions, we've got Ashish Kapur as well as Kunal Shah. Gentlemen, thank you so much for taking the time. As always, a pleasure speaking with you. Let's start with the big conversation that we've been having since morning, which has to do with the RBI regulation change that increased the risk weight that is associated with unsecured retail loans. Smriti, this is a big development, and of course, it's going to have a bearing on the business activities of several companies, banks as well as NBFCs. Let's first go across to Ashish Kapur to figure out what he makes of the change. Ashish, what did you make of this? What are the implications for business in the immediate future as well as going into next year?
But I think the implication is simply that I think somewhere the credit was very easily available and perhaps the regulator felt it was getting misused and getting into an over leveraged position. The impact, I think, is going to be more felt on the NBFC space. I think more or less the private sector banks are very adequately capitalized, so they would have the the necessary additional capital available for continuing their business and putting the provisions for the extra, the extra provisions which are required. The public sector banks would get a bit hit because their capital adequacy is not that good, but they are also not that active and that prevalent in this consumer lending space. NBFCs would have to kind of refigure their way and perhaps would lose a bit of their competitive edge. But again, we're not talking about each and every NBFC. Some NBFCs would still be able to weather this very easily. Comparatively, the better managed and the more well capitalized ones. Overall, I think while this would on paper seem to be a move which will impact banking and NBFCs, in reality, I don't see so much of a change because firstly, I think in terms of capitalization, a large section is very well capitalized. At least a large section which we follow in the market or which we track in the market more often is anyway very well regularized and very well capitalized also. And the other thing is that the growth in the consumer spending and consumer financing is so significant and so robust that a bit of tinkering in the interest rates or a bit of tinkering in the provisioning and hence the cost wise going up and some of the costs which may actually get passed on to the consumer will be absorbed because I think the demand itself is looking very good, very robust and likely to continue growing like that in the future. So a bit of tinkering I don't think will impact in any way, and neither the banks nor the consumer spending.
All right. Let's go to you, Kunal. I'm looking at the Nifty Bank and, excuse me, it's 1% down with only one constituent in the positive, which is AU Small Finance Bank. How are you looking at the sector now after this development? What stocks are still on your radar and you're still constructive on?
So I think overall, if I look at the market structure, it still remains positive. Specifically for Bank Nifty, if I talk about 44,500 now on the charts perspective as a strong resistance. So if this uptrend has to continue, Bank Nifty has to move above 44,500, then we'll see a good move towards that 46,000 mark again. On the lower end, the support is now placed at 43,700, 600 zone where we are currently trading. If on today's closing basis, if we close below this level, we go towards 43,300, which is the next support for Bank Nifty. So I think I don't see much downside from the current levels for the markets. Even from the current levels, if the support is breached, maximum 300 to 400 point downside, what I see. Again, from those levels, we can witness a sharp recovery in the Bank Nifty index. So I'm constructively bullish on the index. Whatever dips you get, utilize that to buy. I'm expecting Bank Nifty again to go towards that levels of 44,500 on the upside.
Okay, it's time to start the queries now, and we've got a few already, but it's just a quick reminder to everybody that's tuning in on the various social media platforms. We're available on the chat feature, so you can send your messages to us there. even if it's just to say a quick hi. You can also send a message on the WhatsApp number that should be flashing at the bottom of your screen as I speak to you right now, or it will at some point be flashing at the bottom of your screen. There's a question that's come in from Sonu on YouTube, and he's asking about Bajaj Finance. And the question is quite pertinent, I think, today, Ashish, which is that can it give 20 to 25% CAGR over the next 5 years? And why is it not performing despite having good results in the past 2 years? So I think the CAGR over the next couple of years is important to pay attention to. Does the model change at all? I do understand that they have been making an attempt to increase certain other components, including home loans, right? So which is a slightly larger percentage of the book right now. Ashish, correct me if I'm wrong.
Yeah, okay. Now, two things. One is that I'll be, to answer the question directly in one line, I'll be very surprised if it doesn't do a CAGR of 20% over the next few years. It will be a very big surprise. I think it will do more than that. Second is, I mean, when the investor is saying it hasn't performed, I mean, in reference to what? It was in the COVID time, it had reached less than 2,000 rupees. I mean, it is 3.5 times that value right now in 3 years. So I don't know how that is not a performance. And also, if you look at it whichever way, I mean, you look at the peak before COVID, it was around 5,000. The peak before it went to correction was above 8,000. So either way, a 20% kind of a CAGR has been done over the last 3 years, whichever point of reference you take and look at. And like I said, I don't see any reason why it will not do. I think consumer finance is really increasing here. And Bajaj Finance has the most robust, well-placed model. I mean, there is competition, of course, but competition is, I think, still far, far away from catching up with it. Yes, home loans is the new segment which they are entering, and I don't see much of a difference because I think the growth is there anyway in their main business, and this is not going to really make so much of a difference. The main story of Bajaj Finance is the great hold which they have in the consumer finance space, and where there is no competition, no visible competition. The other players are all very minor players or very, very fringe players compared to what Bajaj Capital is, and that hold is something which will ensure that the stock keeps growing over the next few years.
Sure. So you would be a buyer at this juncture, and you would buy on dips. That's more or less the answer.
Yeah, definitely. Okay. I mean, there's no question on that.
Okay. Kunal, what about you on the technicals? What can you tell us? Of course, what we're seeing today, and I think also yesterday, if I'm not mistaken, it was one of the counters that suddenly saw selling in the last hour or so of trade, if I'm not mistaken. Correct me if I'm wrong. And therefore, what levels would you watch very closely? Where can you start accumulating?
See, if I talk about 6,800 has been a good cluster for the stock. Multiple times we have seen bounces from 6,800 zone. So even if you are adding on to your positions from the current levels, 6,800 should be a stop loss on the downside. If that is breached decisively, then we will see further correction coming towards the levels of at least 6,000 as well. So I think it's a good risk to reward bet what we are getting from the current levels. At the current levels, you can start buying it. If you get any dips toward that 7,000 mark, then also it would be a good opportunity to buy. Keep a stop loss of 6,800 on the downside. We can again expect a recovery towards 7,800, 8,000 levels on the upside.
All right. Next up, we have another question on the same theme, and the question is from Venkatesh, and he's talking about SBI Card. Now, the stock has been down about more than 5% today, and I would like to point out that they have 100% share in the consumer loans, which is why it's getting highly impacted. But Ashish, going forward, how are you viewing the stock in the longer term?
Well, I'll confess I have been very bullish on this, and somehow it has disappointed, at least disappointed me. I think it hasn't, the share hasn't performed the way I had thought it would. The strength is very clear. I think if you want an exposure in the credit card market in India, this is the only listed player. And so therefore, if you are bullish on credit card spending going forward, this is the only way you can get an exposure, because there is no, there's no separate company which has credit card business that is not being allowed by RBI. It is being allowed in the main banking companies only. And so if you buy a bank, then you don't get only credit card, you get the entire business exposure. So if you want only credit card exposure, then this is the only company. And I think despite having not done well over the last few years, I think the stock has great potential. I mean, it is going to be in a space where it is one of the leading players doing very well. And I think that the space itself is going to grow exponentially. If you're talking about consumer spending going up exponentially, the credit card business also logically will follow the same path. So I think the stock will do very well going forward. In fact, I think the current downturn and the current lackluster performance is going to be giving a great opportunity. I still remain very bullish. I think over the next 4-5 years, this stock can do wonders to your portfolio.
Okay.
So add and be patient. I think this is a great story going forward.
Yeah. Let's take the cues from the chart as well. Kunal, how's the stock looking?
The undertone for the stock is quite bearish. It has been trading in a downtrend. I'll not be a buyer at the current levels, 670, 680. This has been a good demand zone for the stock. So if it comes at those levels, that is where I'll be interested in buying the stock. Where again we can see some good up move in the stock towards 750, 760 kind of a level. So at the current levels, I would say it is avoid. If you get at around 670, 680, that would be an ideal range to buy the stock.
We've got a couple of questions on YouTube, and gentlemen, I'd request you to keep your answers a little shorter because we'd like to take as many questions as possible. This is coming from Rajesh Maheshwari from Indore, and he's asking about GMM Fowdler. He's bought 70 shares at an average price of 1,600. What is the short to medium term outlook? I'm guessing on the fundamentals, Ashish, if you can provide a medium term outlook of this particular counter, what would you say?
Well, to be frank, I haven't tracked it very lately,
Okay.
so I don't know how it's looking at this price.
Okay, but then in the same, TK, okay, I'll come back to you on the space then if you have alternatives to pick. In the meanwhile, Kunal, I'll come to you on the charts. GMM Fowdler bought at an average price of 1,600. What's the short to medium term outlook?
I think looks quite bullish. He has bought it at the exact demand zone. I'm expecting a recovery towards at least 1750 levels on the upside, which is the resistance for the stock. So I think keep on holding it. You will get a good upside in the stock in the near term.
Okay. Manufacturing company, I believe that it has certain, if I'm not mistaken, so engineering and design elements, it is playing in the automotive sector. Correct me if I'm wrong, Ashish. And so therefore, what alternatives would you suggest perhaps in the auto anch space?
Well, there could be many ideas in the auto space. I think although the space has done very well in the recent past, but no denying the fact that the future is very bright. I think you could look at anything from Motherson Sumi to Bharat Forge to even your steel strips. Or there are many such ideas. I think, and also I think manufacturing. There are a lot of things which are. For example, Dixon. I mean, if you look at the manufacturing themes, and Dixon is a good idea. Siemens, after the recent, division which they have, decided to hive off, Siemens itself looks a pretty interesting story going forward. Then I think there are plenty of ideas in the manufacturing, auto, and steady space. I think there is no dearth of it. I mean, there are many ideas. There are including. Things like Minda, Minda Industries, things like there are many of them. There are plenty of them to choose from.
Let's take the next question. The question is from Abhiram, and he's talking about PTC Industries, and he's bought the stock at 1800 levels. The stock is now currently trading at 5700 levels, so quite a profit there. He wants to know if he should stay invested in the stock or is it a good time to book profits? Ashish, how are you viewing this in the longer term?
I didn't get the stock. Which
PTC Industries.
PTC.
Yes.
Okay, no, I haven't. Sorry, again, I haven't tracked this one.
All right, let's go to you, Kunal. How are you viewing this?
Yeah, I think on the technical chart, it has been in an upper circuit since the last 2 to 3 trading sessions. Again, I can expect the stock to go towards the levels of 6,000. That is where I will recommend him to book profit because there's a strong resistance placed over there. We might see some profit booking coming over at those levels.
Rajesh has got a question on NRB Bearing and Schaeffler India. He's holding both in an average price of 200 rupees and 3040 rupees respectively. What is the outlook on these two stocks? Ashish, do you have coverage on either of them or both of them? And if so, what is the view?
NRB bearings we are quite bullish on. I think certainly stay invested. Looks again when we're talking about manufacturing, this could be another good idea. Stay invested, and I think you could even add more at these levels and add more on declines as well.
What about on the charts? If you can also provide us a view on Schaeffler India, Kunal, that would be nice.
Yeah, I think firstly, if I talk about NRB bearings, definitely the chart is looking very strong on the weekly and the monthly time frame. So definitely it's on the buy list. One should keep on holding it. We can expect in the short term targets of around 300, 310 on the upside. Talking about Schaeffler, even that is a one stock which has been a good underperformer. But recently we have seen a very big up move in the stock as well. Now on the technical charts, 3600, 700 is where the stock has made a double top formation. And if this double top formation continues, we can see some slide on the downside. So for me, Schaeffler is something which I would say if you get any rise, try to book profits and exit the stock, because whenever the double top bearish formation is formed, we can see a good healthy correction of at least 15 to 20% on the downside.
All right, we have another question from Abhiram, and he's talking about JSW Infra. He has already bought the stock at 202 levels. Now the stock has hit upper circuit today. Because of a port bid, they have won a port bid of over 4,000 crores. Ashish, what's your long-term view on this?
Well, I think this stock is going to do very well. It remains a very good idea, and I think the investor can stay invested, or if he has not invested, can certainly buy at these levels.
Kunal, what's the cue on the charts?
I think chart definitely looks extremely strong, although I have very less chart because it is a recently listed counter. But I think the kind of setups what we have seen in the stock in the last at least 1 month, the stock is likely to see a good up move towards 260, 270 zone as well. So definitely you can add more at current levels or any dips. 260, 270 is what I'm expecting the stock to go on the higher end.
All right, Nilesh Patil has got a question on delivery, which he has bought at levels of 445. Kunal, I'm not sure if you have enough data to tell me about what you're looking at in terms of the technical levels. He's looking for a 2-year time horizon. What's the view?
Yeah, I think yes, definitely. I have less data on this perspective. For me, the stock is trading in a sideways trend. The real momentum for the stock will start above 450. So 450 is where the breakout for the stock will come in, and then we can see the stock going toward at least 560, 570 level on the upside. Since he has a long-term view on that, for 1 to 2 year perspective, keep on holding it. We are seeing base formation happening. On the lower end, 360 is where we have a support. If that is breached, then that would be an exit point for the stock. Till that time, you can continue holding the stock.
Okay. So do you have a view on this one, Ashish?
Well, I think, frankly speaking, the stock had, the lot of, buzz created at the time of the IPO, and valuation has always been a question mark, although they have a kind of a different digital model compared to the normal logistics companies. But I don't agree with that completely. I think there are many better options even in the logistics space available in the market. So I would avoid it at this level.
All right. Next question is coming from Sohana, and she already owned KPI Green shares and she bought it at 1200 levels. She wants to know if she should hold or she should start selling the stock. Ashish, what's your long-term view on this?
Well, this stock has been very difficult to catch. So if the investor has managed to buy it at a lower level, good luck and stay invested, because I think the upside is still there. Is quite a unique model, doing very well. So there's definitely good upside there. I think around 2000 is what you should expect in the next 2 years. So stay invested.
We've got Muiz that has asked about realty ancillaries, just like we spoke about auto anks. And I guess it's a theme because realty as a pack has been doing so well, gentlemen. So the likes of Prince Pipes, I would think, or some of the other pipe manufacturers or some of the tile manufacturers. What would you see about the top pick fundamentally from that space, Ashish?
Well, I don't know whether that segment covers what all industry. I think it will cover a lot of industries. It will also cover paint companies, tile companies, anything to do with any construction material, pipes, etc. So very broad theme. What I think will continue doing well is, of course, pipes will continue doing well. There again, Astral is a very great option in it, very fundamentally, very strong, secular kind of growth story. Paint companies, there is some pressure because of more competition coming in. So very interesting space to keep looking at. Not anything to buy at the moment, but yes, great buying opportunities would emerge in that. Tiles, I think, would be another thing to look at. I think there are not too many players in the organized space now, and there I think you could look at Somani. Not necessarily saying a buy at this level, but continue to track it. I think you normally the ancillary thing will start after a little lag, because if the real estate is doing very well, the demand for tiles and other accessories would pick up following a lag. So a good idea would be to track all these companies. And like I said, I think between pipes and tiles, you could look at plenty of options like Somani, Astral. These would the two which come to my mind. But there would, I'm sure, be other ideas as well.
All right, let's take up the next question. It's coming from Kishan, and he's talking about BLS International. He wants to know if it's a good pick within the sector. Ashish, is it a good time to add the stock, or is there some other stock that you recommend within the sector?
Well, I think you have to buy this because it's technically not comparable strictly with any other company, because the large part is the visa services, which, again, just like SBI cards, the visa services are what you are bullish on, then this would be the stock to buy. Again, of course, it has other things also. But this company has done very well. Stock has done very well. It has really been an outperformer over the last 2 years. I don't know whether it's a great time now, because after the kind of outperformance we have seen, I do know, I'm pretty confident the company is doing very well. So I think if the investor is bought in already, stay invested for sure. For fresh buying, I think just wait. Anytime there is a panic in the market, you do have these mid caps falling disproportionately. That would be a great time to buy into this blue chip counter.
Okay. So I'm not sure about the buy price of this particular counter, ISJEC Heavy Engineering, because the current market price is around 810.75 or thereabouts. And Ujjwal is saying that he's bought this 2 years ago, which is why I'm not too certain about the buy price. He's talking about 791, unless there's been some corporate action. What's the view on the fundamentals? Should he hold on to this, assuming he's held for 2 years? Ashish on the fundamentals, and then I'll come to you, Kunal, on the charts. Ashish?
Alex, I haven't tracked this, so sorry. I have to give it.
Fair enough. Okay, so the question then, Kunal, is he's held for 2 years. What should he do on the charts? I see that the year-to-date performance has been quite spectacular for this counter. Should he book right now or keep holding?
Sorry, Alex, can you just tell me the stock name? I couldn't get it.
We're talking about ISJEC, ISGEC Heavy Engineering, which is currently trading at 812 or thereabouts, or 810 or thereabouts.
Yes, I got the stock. Yes, definitely. On the technical chart perspective, it is looking very strong. Keep on holding the stock. The stock is on the verge of a breakout. We can expect the stock to go toward the levels of 920 on the upside. So definitely it's a buy. If you are holding from lower levels, continue holding it. Still, there is more 10 to 15% upside left in the stock.
All right. That's all the time we have for today. Thanks, Ashish and Kunal, for joining us. And viewers, thank you for tuning in. We'll be back tomorrow, 11:30 a.m.
Tomorrow, on Monday.
On Monday. Until then, stay tuned to BQ Prime.